Today is Monday, October 7th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS Senior Financial Economist. Steve, let's start with the grain markets this morning. The soybean market is trading in a very narrow range, with the last four sessions trading between 9.10 and 9.20 per bushel. What is the market waiting for, and which way will it break out?
I think the market's waiting for the USDA's Thursday crop report. We saw on Friday some private estimates that the bean crop's going to be smaller. We know going into this that the carry-in will be smaller, and so we're getting down to a number that actually is a little bit friendly to prices. We're also kind of watching South American weather. It's kind of drying out in parts of, let's say, the northern half of Brazil. I think that at the report day, we break out on the upside. I think we rally after the USDA numbers. And then after that, I think it's going to have to prove itself to be at that high of a price. And then I think we go lower into harvest.
December corn is also consolidated in a little bit wider range between $3.95 and $4.85 per bushel. Which way is corn going?
When you look at the corn market, the actual change in the carry-in and potential carry-out is even more friendly than what the beans did. And so the farmer's not selling, and so I also think that we break out on the upside, and I think that we've traded over $4 after the report. After that, I think we'll get into some harvest pressure. We don't have the exports to support the market there, and we go lower possibly to the end of the year.
Steve, you mentioned some drier weather in northern Brazil. Is there any other news in the weather?
Well, we've got this big snow blizzard that's going to hit the northern plains in the next few days. In talking to farmers up there, they don't have all their crops harvested. We'll just see what kind of impact 50-mile, 60-mile-an-hour winds and heavy snow has on crops up there. Though that front will moving to the Midwest with some rain. After that, it looks like we'll have a drier trend, and we'll start maybe getting into some harvest issues. I think the main thing that we're looking for as far as a 60-day outlook is maybe normal to above temps and maybe normal to below precip, so that should be good for harvest.
Finally, Steve, if the USDA releases a friendly report on Thursday and soybean prices rally 50 cents, corn and wheat, say, rally 20 cents, should farmers sell that rally?
I think they should. They should have resting orders in the marketplace to sell above that. If we look at 2020, threat of recession, the presidential elections, farmers planting more acres, a good crop year weather-wise, prices will go down from here. And so I think that they should have resting orders on a rally and sell it.
Turning toward the financial markets, Alan, what is the outlook for the U.S. dollar?
Well, it still appears that the dollar index is going to advance. It was just last week that we did see the dollar at its highest level since June of 2017. So even though the Fed is likely to lower interest rates this year, the Fed is, in my opinion, going to be in a situation where they will be cutting rates less than elsewhere in the world. So that suggests that the dollar will remain strong. In fact, it will probably continue to advance against all of the other major currencies.
Alan, the U.S. stock index futures are lower today due to a less optimistic tone to Thursday's U.S.-China trade talks. How would the trade situation impact the U.S. stock index futures over the long run?
Well, first of all, it's an obvious negative, but keep in mind it was last July that the stock index futures made a new historical high, and that was right in the midst of these ongoing trade wars between the U.S. and China. So apparently there is something else going on, something possibly more dominant than the trade situation, which is still very much a consideration to contend with. And that has to be the interest rate situation, which still is very accommodative, still very supportive to stock index futures, suggesting the bull market is still intact. And from time to time we'll have some problems, of course, with the trade situation that will only temporarily get in the way of this bull market in the indices.
Finally, last Wednesday, the 30-year Treasury futures broke out above a double top resistance area.
Right.
Will the Treasury bond futures continue to advance?
Yes, they will. This is a double top breakout, but the fundamentals seem to confirm that this technical breakout is for real, and of course the Fed likely to cut rates at the end of this month at their October 30th meeting. Other central banks cutting rates, so no inflation to speak of anywhere, so the trend is still higher for the bonds. In fact, all of the interest rate futures markets here in the U.S. are likely to continue to advance.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.